Small caps ended the month with a loss for the first time since March 2020. The Nasdaq 100 outperformed on the month but was up only 2.5%. The S&P 500 is up for the sixth straight month, which is the longest streak since 2018. But the big news of the month was that China really got monkey hammered with the Shanghai Comp suffering its worst month since October 2018. And in other news, did you know that athletes in the Tokyo Olympics are not competing for gold, but rather for silver? Apparently, there's very little gold in an Olympic gold medal. The gold medals are primarily made out of silver. They're silver medals covered with about 6 grams of gold. So, for all practical purposes, if you win, you're getting a silver medal. Now, I don't want to start any conspiracy theories, but all that gold that the government has, is it really gold or just silver covered with gold dust? Well, we'll likely never know. So, let's take a look at the charts. And today we're going to take a look at two charts, beginning here with the 1-year daily on the spiders, the S&P 500, and the symbol is SPY. And the close on Friday was 438.51. And as you can see, going all the way back to November of last year, for the most part, we're just riding up along that 50 EMA on the downside, and then an upward channel line moving on up through here. I'm not going to draw it because you know it's not going to be straight. So moving on down here into the volume. Volume looks fine. There's no red flags there. Into the MAC. Now, this is kind of why things continue, at least in the price chart, continue to move up, is because everything since about mid-November, for the most part, is above the zero line. When it's above the zero line, you have strength. It continues on, even if we're at a level of, say, 2 or even 6. Now, 6 obviously is stronger, but still, 2 or whatever is above the zero line, and that means your market is going to continue on up. Into the histogram, you can see the volatility there, staying around that zero line. Into the price rate of change, pretty much above that zero line as well, a few times below, but nonetheless, it's pretty strong. Into the RSI, same thing there, same thing in the stochastics, and the same thing in the Williams. How boring. Moving on up here, back to the price chart. Well, it may be boring, but profits aren't. Let's go to the next chart. And now we're looking at the 2-year weekly chart on the SPY. And this is a little bit different than the last chart we looked at. This chart here, the price is running just above the 20 EMA, again from this time frame, moving all the way up here. Now, it's because there's so much money continuing to find its way into the stock market. Volume looks fine. And then here in the MAC, it tells you the story that once we got above here, at least in this level, the fast line and the slow line have been moving together, and they continue to elevate. And so as long as they're elevated, the price chart is going to continue on up. And it's at a pretty good elevation. It's at 14.19 and 14.3. So that's pretty good. That's pretty strong. So I think it's just going to continue to do that. Here in the histogram, you see a little bit of volatility. But again, the same thing in the price rate of change, relative strength index, stochastic, and the Williams. It's just a very boring story, but you already know that. But as long as it remains boring, then we remain profitable with your stocks, hopefully following along with the SPY or some of the other indices. Now, some of us in Chinese stocks, well, that's a different story. And more on that later. And so for today, that's ChewDog Charts. Thank you.